So with buying and holding, banks typically want the properties to be occupied before they lend on it. And then banks also typically look for 1.25 to 1.3 DSCR, which is debt service coverage ratio. So that means for every dollar that you pay in mortgage, they want to see that you're making a 25-cent profit. So for example, if the mortgage is $1,000, the rent must be at least $1,250 for a bank to lend. So you just multiply whatever the mortgage payment is by the 1.25 to get how much that is. And then like if you have questions on how much a certain amount would be for the mortgage, you can go online and find a mortgage calculator and plug in numbers, and it'll tell you roughly how much you'll be paying in mortgage. And the only thing with that, when you have an investment property, typically your interest rates are 1 to 2% higher than whatever homeowner interest rates are, and then your the term, typically it'll the loan will amortize over 25 years instead of 30 years that most homeowners have. And then depending on which bank you go with, the loan may be due within 7 years, like 7 to 10 years instead of 30 years. So it'll be making payments like you're paying on it for 25 years, but after 7 to 10 years, you have to then refinance the loan again. So that's one of the games that banks play to keep the money going, because every time you refinance, you have to pay fees. One of the things, there are some companies out there that do 30-year fixed rates. So it's just the same as a regular mortgage that a homeowner would have, but with that, the interest rates is probably at least 3% higher than what you would pay if you were a homeowner. So although the bank wants to see that 1.25 to 1.3 coverage, you really want to look and find properties where your coverage is 1.6 or higher to be successful. So for example, if the mortgage payment is $1,000, you want to make sure that the rent is at least $1,600 for that to be a property that you're going to consider buying. So this will allow you to have room to hire a property manager, set aside money for future repairs, and then also take home a little profit.